Hey, how's it going? Welcome back to mentfx. So we've had our team completely demolish gold today. I'm going to make this very quick and very simple for you, and I just want you to all to understand this. So gold is something we followed with the team for a few months now. Just so you all understand, gold specifically, we've been following with our team since around the 22nd of February, ever since we started to shape up back above the 10 and 20 and the 50 EMA. And from this point here, as price went into a stage one, so went sideways, and we were expecting the expansion, since this point, we've been extremely bullish. And our team, as well as myself, have been able to catch across all timeframes based on the timeframes that you personally trade, which is one of the main things that I look to teach. We're able to catch trades throughout this entire move here, throughout the sideways here, throughout these entire moves here, throughout the sideways here, into these up moves right here. Then we stopped watching the market around this time. We thought it would start to subside and fail down, but then all of a sudden it started its move up again. And once again, we've been following it long since these points here. And since these points, we've begun to see moves out of the market, going sideways across rising MAs, and new opportunities for entries and continuations higher. Now, based on the time frame that you personally trade, the trades available to you are going to be different. So in our most recent webinar, this would be webinar 161, which is held every single Sunday with the team, but I'll give you the synopsis. Since I personally, the person you're watching, me, enter on a 65-minute chart for an entry, which is 60 minutes, 65 minutes, doesn't really matter. There's nothing special there, I just use a 65. The entry that I should have been taking is this one right here. Now, I personally did not take this entry, so I'm not in this trade, but this is the entry that I would have taken, should have taken, if I was in front of my computer. But again, trading is a discipline where you're not going to be in every single move, and that's something you just need to accept. So boom, that trade was not taken. That does not matter, okay? Instead, we need to understand the fact that I was watching, I wanted to trade it, I didn't trade it, and that's okay. But the most important thing is that since I didn't trade it and the opportunity had become available and then price moved, there is no opportunity for me now. And the reason for that is because the EVC, which is simply the approach to timeframes, where my entry is on a 60-minute, and all I do for the EVC rule is I multiply it by 6, multiply the entry by 6 to get the rule of 6 basically, multiplied by 6 to get 300 minutes, which is basically for me around a day, and then multiply it by 10 to get 10 days, which is around a week. So my overall EVC, which is E multiplied by 6 to get the V, multiplied by 10 to get the C, is this right here. And what I need to happen on my validation, which is what V stands for, my validation time frame, is for the daily to be surfing the moving averages higher and going sideways. So for myself personally, the entries I should have been finding should have been inside of here, as it surfed higher and got tight along the top here, or around here, where it continued to surf higher, got tight around this area here, and I could look for entries inside of there. That's exactly why this entry right here is phenomenal, because it lines up with that, and I can buy stop this demand, these MBs, to have the move play out higher. Now here again, you have MBs forming that could be buy stopped. The reason I don't take them is because if I take a look at that same daily, we are no longer meeting that rule. Price is no longer sailing these MAs higher. It's no longer moving higher with the MAs. Instead, it's gone away and moved away from the MAs. As you can see, it's way above price. And along the top, it hasn't started to create any tightness. There's no stage one or sideways market, because the way markets tend to move, especially on the validation time frame, as taught in the mentfx mastery course, which you can check out. And even in your first month, you can check out the whole thing. Prices move, they go sideways, and then they deliver. They go sideways and they deliver. And that's not what's happening here. So for me personally, there's no 65-minute chart entry that I can take. I cannot take these MBs. These are not proper entries that I should be taking, because they're likely going to result in failure. But, okay, I had to pause it for a second to take a quick short break and go get my family from the airport. But very simply, what I was saying is that the true 1-hour entries, if you're following an EVC in my specific rules, right, where you're just looking at that EVC rule, the entries were available here. And this is where the entry should have been taken, because that's where the validation time frame, right, so that would be the daily in this case, was actually clear for a setup. So it was actually over here, or even in this area right here. Now, beyond that, I can't really trade it. I can't personally get involved in it because it's too far extended from the things that I tend to look for, which means that any entry I take here has a higher likelihood of actually chopping around, which is something that I don't personally want to trade. But luckily, if your EVC follows more of a lower time frame approach, all of this action right here is perfect, absolutely perfect, based on a lower time frame trader. You can see I have some examples here from the most recent webinar, but most importantly, we can look at even the action that happened today, basically Monday. So starting Monday, which is right here. If your overall EVC is simply a 1 minute entry, then simply, right, if you multiply that by 6, you get around 6 minutes as your validation time frame. And if you multiply that by 10, you get about 60 minutes, aka the hourly time frame for your context. So again, if you're trading a much lower time frame, the approach you would use is this one right here. One where you start on the 60, you go to the 6, and then you actually get involved using the 1 minute. And even though, as we're here on the 60 minute, it may look like there's not much here, this in its own right is huge potential RR gain and wins on an actual account, to the point where if you're trading with like Ment Funding or another firm or even your personal account, you can easily use these moments to actually get yourself funded on accounts. And yeah, I mean, that's really what you're doing, because you're trying to build an actual system that makes you money. So if you're using this EVC, the first thing you need to know is like how to actually find a good market. There are many ways to do this. You can look through markets on your own, just go and look through all of them until you find ones that are in a clear context. Another way is using tools available to you. What the heck was that? Ignore it. Is using tools that are available to you. So for instance, all my mentorship members and whatnot have access to actual software and tools that we build out. And funny enough, if you take a look at gold here, this is what it's been showing for the most part. So if I actually go in here, I can add 5 minute and 1 minute as well, because I know that a lot of you guys would be trading a lower time frame. And if I add it, so let me actually reload it. If I add this in and tick them all basically, all the way up to the daily and just go to gold, you don't even have to use the higher ones. You can basically use like up to a 1 hour, right? Because you're trading a lower time frame. And simply look at that. So we'll call it the YouTube video screener, and we'll actually just put everything in here, okay? Okay, we'll just do gold, it's fine. We'll do gold. And we'll just take a look at this. Okay, we're gonna, oh, who knew there'd be little technical issues when we do this? Everything, okay. Go to editor and we'll add the 1 minute and 5 minute. Okay, it just wasn't logged in properly. There we go. And we'll look up gold. So if I look at gold here, you can see a very telling story in regards to where it wants to run, right? Because this is the screening tool that our team uses to actually decide if something makes sense to be followed. Now, similarly, on the website, there's this thing called the sentiment viewer, which is completely free if you don't want to be part of our team or have access to good resources, where again, you have an over 70% reading on the daily for institutional sentiment, which is very powerful, because that means that likely you're going to see over the coming weeks or months that given market deliver in the same direction as the institutional sentiment, okay? That said, today was Monday, and very simply what I would be doing as a trader is I'd be starting with as a 1 minute trader, which I am not. Well, I used to be, but I am not anymore. But if I was and I was trying to get funded or have a profitable system, or let me actually go back here. I would start by starting on the 60 minute, which is exactly what we're doing here. And on the 60 minute, the first thing I would do is I'd look for a market condition within which we're coming out of stage 1s and starting stage 2s. So very simply, when I look at this, right, the market always moves in stages, always in stage 1 to stage 2, stage 1 to stage 2, or it's just choppy and not worth looking at all. This is a market that has now proven through a few tools that it has the potential for bullishness in it. Okay, we've been watching it with the team for a while. Anyone that's part of the team already knows this, but if you haven't been a part of the team or you're just learning from this video completely fresh, this is a market we've been watching for a while and has been proven to be bullish using the tools that we've looked at. And similarly, you could also go through the markets yourself and find the markets that are actually delivering very bullish and whatnot, okay? But nonetheless, what markets tend to do is they move in stage 1s and start stage 2s. Stage 1s into stage 2s. And this is all covered in the mastery section of the mentorship. However, the way these will tend to look like on a higher time frame is price will build some kind of range and will start to build itself out of that range. So at the point that it starts to reach beyond that range is when you want to expect the stage 2 to deliver. And the cool thing about expectation and the fact that you're using a 3 time frame setup, where basically the EVC, since the 1 minute is the E, okay? Since you're using this time frame setup, you're going to be able to then scale down and decide if it's even worth looking for that next step in an actual entry instead of just taking random entries. So in this scenario here, given the fact that we're 1 minute based traders and we're looking at a 60 minute now for the context, all we want to see is that the market has stage 1 in some way and has started to make its way out of some kind of range. So when we look at this here, and we can actually look at it from the left a little bit, what I'm going to do for you guys, I'm going to make this a black, so it's much easier to see, and I'll make it fatter as well. So it's very, very easy to see at the moment. And I'll just get rid of these lines. I'll actually get rid of all these lines. And what we're gonna do is we're gonna look at the actual action to determine when is the context, which is the hourly, clear for watching. And what happened before? Because oftentimes, if a market has been good before, AKA the screener and the tools that I've built out now for the software of what we do. So if we go to screener and we log in using our Discord, which is tied, of course, to the entire space, then of course, this is something that's already proven to be bullish, but the reason it's proven to be bullish, I'll get rid of these because I don't use them personally. And the reason it's proven to be bullish is because it's continuously delivered stage 1s into delivering stage 2s. So what you have here, if I show you, is you had some kind of stage 1, a lot of sideways action that began to reach out of a sideways range and started a stage 2 basically around this point here. And since here, it would have made a lot of sense, which is what we went over in our most recent webinar. That would be webinar 161 if you actually want to go and catch it and rewatch it. But since this point, it will be a very clear area to start watching your 6-minute and 1-minute timeframes for actual entries, all the way through until it starts to collapse again. At that point, you can see once again, price builds some kind of sideways range, and as it starts to come out of it, as it starts a potential stage 2, these become valuable areas to begin to watch. Similarly, it does it again around here. These are all valuable areas to watch. Then it breaks down, and again, it builds some kind of range, an undercurrent of range, and what that does, what that shows you, is the supply that's entering during that time. And what happens is, as demand starts to take over that supply and actually starts to validate demand. So this is what I teach as true demand validation. In the mentorship and the course content, what you learn is to think about the market in this sense right here, where once you understand that the fundamental rules of the game is a game of supply and demand, where you have down moves that are created and then up moves that validate them and demand gets validated, that's ultimately what's happening. New demand is coming in and starting to validate supply. So those become areas within which you could watch price because new demand is clearly coming in. And around here, once again, demand comes in and all of this here is opportunity on a lower time frame, like a 1-minute and a 6-minute for your confirmation. Then again, you get the sideways, which is coming out of this overall stage 2. And again, it's creating some kind of sideways action. And right now, as you can see it right here, again, there's no perfect way to draw the line. It's just an understanding of supply and demand. As demand starts to push out of all the supply that had come in, a new stage 2 is beginning. So the expectation is that this is likely going to now continue making a move higher, just like it did before, just like it did before, just like it did before, over and over and over again on a market that has proven initially to have bullishness behind it. So at this point here, it would make sense to step down to a 6-minute to begin to validate, literally the validation time frame, what is going on in the context before we actually decide that it's worth to trade on the entry. So if I go to the 6-minute now, there's a very simple thing that you want to look for. The reality of profitable trading is that money is only made in particular momentum-based moves. It's not actually made in all this chop, in all the back and forth, in all the nonsense. It's actually just made when price makes a very, very clear, strengthy push and then starts to go sideways and move higher along either the 10, the 20, or the 50, EMA or SMA. So I personally use EMAs for my entry time frame and SMAs for the validation, just because it's cleaner for me. So what price will tend to do is as it moves higher, it will find itself big money, composite orders, the institutions are going to start to repurchase and buy into new positions as these things pull back to their rising averages, sometimes the 10, sometimes the 20, sometimes the 50. The reality of determining which one it's going to be is going to come down to the actual setup on this and the entry time frame, which would be actually the 1-minute. That's how you actually end up determining if it's ready for an actual move. And that's going to be taught on this channel later, but it's also taught in the mastery section and the webinars of the private mentorship, which I highly recommend that anyone serious about their journey actually join, because you will never receive better information and learn how to think for yourself, as well as trade any market on any time frame. That's why I create this free content, because I want to give you as much as I can so you can start finding profitability. But if you want to get really, really good, work alongside me and amazing other people, join the link below. Okay, nonetheless, what markets do is momentum will come in, proper orders will come in, and it will surf higher to create opportunities. And within these areas, structural moves will be created on an entry time frame, so that would be the 1-minute, to give you entries through buy stops, through MBs, through demand formations to keep going long. This is actually taught, again, I'm just going to show you examples, because again, I don't mind making some of this education free. The point is, I want to give a step by step to someone that is part of the team. That's always the goal. So what you'll notice is in any trades that I personally have taken, the same thing happens. As you look at a lower time frame, what happens is structurally, you begin to deliver normal higher highs and higher lows, not the way that you're taught online, but higher highs and higher lows in respect to how markets actually move, which tend to be more along the lines of this right here, which is again taught. But again, if you start to understand that markets really move like this from a standpoint of structure, you start to understand why the basic teachings that you see online where people teach you to think that price does this is complete nonsense, right? People want to teach you that higher highs and higher lows form like this, that price always comes to the perfect like fib ratio, that price perfectly makes a move down, a change of whatever, come up, come down, change of whatever, come to the, and over again. This is not how markets move at all. This is complete nonsense. The reality of the markets is they move like this. And once you understand that, you can position yourself for the actual trend. That's what I'm teaching you to do, right? So you can see on actual entries, what's going to happen is price is going to build those exact structures and then create highs that you can buy stop. These become what we call MBs. These are demand zones, right? Demand formations to start making a move higher. Nonetheless, let's just return to this. So what you're looking for ultimately is for price on the validation to start moving higher and to surf higher basically, which is basically demand entering that market. And on a lower time frame, the entry time frame, for structure to begin to validate what's going on in the validation. That's what creates a very good entry. Okay, so these were great scenarios that I was showing my team in the most recent webinar because these actually did create those good moves. And what you would do is you would look for similar setups, right, in current price to actually get position. Now, right now, the only thing I see is that, you know, this had a little bit of action that was tradable back here. Now, I missed that. That was on Sunday, whatever. If you're trading a 1 minute chart, you shouldn't be stepping down to it until you have a criteria like this met where price starts to surf higher and go sideways. So right now, I would simply wait a little bit. And now what you're starting to see, so these are the starting points of this, is price kind of begins to surf higher along these averages. What I'm going to do now is I'm going to put this back to my actual, there we go, to my actual colors because I like those colors. What you're seeing now, if you kind of look at price, is that it's actually sailing higher. Now, again, I haven't tested this action before. I'm doing this live, so if we take losses, it's fine. I just want to show you how to think about this so you can approach trading from an actual profitable perspective and an actual trending perspective too. What you're seeing is prices surfing along the rising MAs here and putting in some kind of tight range. What this means is that your entry time frame, if it's clear, is likely going to start setting up a clear structural move with other structural moves inside of it that are breaking down to actually create buy stoppable structural moves, also known as demand, also known as ment blocks, as I teach them in the mentorship, to make a move higher. Those are the opportunities, also known as on this channel as ICI. So that's what I taught as an ICI on this channel, okay? This is what you want to see on those lower timeframes. So this is a moment where it actually now starts to make sense to step down. Notice how I'm not just sitting there on the 1 minute looking for the entry. This is complete nonsense that is taught online. Instead, there's a synchronization between timeframes for actual entries. So as I move to a 1 minute now, that's what we should see if there's gonna be an entry. And what we see as we move lower here, and now again, I'm putting on my EMAs because those are the ones I personally use. And again, this whole tool right here is available directly to all mentorship students as well. So you get a ton of value instantly, but you don't need it, right? You can go and put these on yourself. You can add all the indicators individually. There's no problem with that. So what you're getting here, right, is you have an overall structural move. You have basically this low to this high. You have a structural move that is now correcting. So this is creating a low to a high to a higher low. This is what is truly creating what we call validated demand across timeframes. And within that, you are meeting the rules for what you want to see, where price is breaking down lower timeframe based structure for the purpose of putting in likely new moves to the top side. So this is actually creating the fundamental starting blocks of a move higher. So what oftentimes happens just looking at this is that price will build some kind of what we call an MB or a demand zone. So like one of these highs or one of these highs that will become a buyable buy stop. Now, what I've noticed from a lot of my testing is that oftentimes price wants to get above the 50 before I take an entry. So what I'm going to do is I'm going to give it some time to start creating an MB before I look to buy this. Okay, so I want it to go sideways. So I'll wait. There we go. Perfect. So what you'll normally see is price will then go sideways at one of these points at the 50 or just above a rising 50 and will create a high that becomes a very buyable, what we call demand zone. Because now what you've done is you've created demand after demand after demand, and you're entering through the creation of that demand. So a buy stop, when you set up a buy stop through this high, again, not a limit, but a buy stop, and then you protect down under basically the MB or the overall lows, that becomes a very, very good opportunity for a trade. And that's how I would approach a 1 minute trade if I was trading. Now, again, I have no idea what this is about to do, right? Even if it loses, it's fine, because again, you're learning that the markets are not just made there so you're winning every trade. That's complete nonsense. You're gonna lose most trades. That's a really good thing, because once you understand that, you're actually gonna start making very good money, okay? So we'll see if we get tapped in. So price actually does tap us in. Now, this doesn't mean anything, right? Because there's no management yet. We haven't moved to break even. We're still full risk. And the reality is price could easily just do this. But hopefully, due to the fact that we've done our analysis properly, it's meeting the criteria of the EVC, it's lining up, and we're looking for the structural entry to start entering this. We're gonna watch for this thing to start moving higher, and we can break even on it as it does that. And if it does that, what that means is that demand is being validated across other time frames. So it's again creating this, what I call the perfect version of demand, which again, we go into huge depth on it in the mastery section. And I suggest anybody watching this to just join up, even for a month if you want to check it out, but hopefully you stay on for the long run because you realize the kind of value you get. Nonetheless, this is the approach that we use in understanding true trends. Notice how we're not sitting here looking at random zones up here, or random zones in here, or zones and random zones here. There's none of that's happening. Instead, we understand the flow of supply and demand, and we enter through that. So the expectancy now is to see it move higher before we move to break even. Otherwise, it just fails, and yeah, okay, great. So we actually fail down and take an easy loss on this. And I want you to recognize this because, again, I can have the correct assumption and an entry that might look good at the time of entering, and it can just instantly become bad. That's okay. That's part of the game. Now, as it does this, though, it sets up, because on the 5 minute, it's still setting up this trade quite well, right? It's still surfing this and scaling higher, which means there is going to still be likely an opportunity on this thing, right? So it's important to not let the potential of a loss or the potential of a trade affect what you believe about a market unless it's not clear at all. So right now, the V, in terms of its surfing and moving higher, is still very, very clear. And it still is setting up in a way that if it starts to move higher, this is likely going to create a stage 2 that wants to go higher. So I would continue to watch a 1 minute for an actual entry. Okay, so we wait, and again, you can see it's starting to build the same thing. You start building inside demand, and now you're creating demand through this high. So once again, similarly to the other trade we just took, I would take a long through this, set it up as such, and look to take it long if it wants to validate now, because this is going to validate demand, and I'm going to be in a buy stop, and that's how I would follow this on an EVC of a lower time frame entry. So we wait, and then price enters us quite beautifully, actually. Now, this is a huge candle, and the reality is the next candle can easily reach down and then keep going. So in this scenario here, I would wait until the next candle breaks higher or pauses and then breaks higher to move myself to break even, because my break evens are based on the actual movement of price. So price basically just pauses and instantly goes up. At this point, there is no reason for me to have a risk on this. So I take the risk off, I move my stop loss to break even entirely, and this becomes a free trade. And at that point, what I do is I actually follow the 5 minute, which would be the validation, or the 6 minute in this case. I would follow this to now partial the move. Now, oftentimes, 1 to 3 candles from what I've tested on the validation time frame will put in enough strength for you to take your first partial. It's almost the best way to do it, unless it goes very crazy in the first 1 or 2 candles, at which point you can partial instantly, okay? So in this case, I would just wait, and I would let this thing do whatever it needs to do. So this is the second candle, I'll give it another candle now. So around here, at the close of this candle, I would easily partial about 50%. You can wait another 2 if you want, but when it moves a lot, you want to lock yourself in for strength, of course. So at this point, I would close 50% of this trade as is at this point right here. So I'd close 50%, just like that. And that 50% would be worth about 3.92 over 2. So 3.92 over 2 is 1.96. We'll transpose this, plus 1.96. So I'm just recording the findings now. That's plus 1.96. And now, on average, what's going to happen is if it's a true move, the validation time frame, using, in my case, the SMAs, because these become trails, the price should really just remain above a rising 10 or 20 SMA. You can see here, right? Above the 10, fails down, then above the 10. So it should just remain. And if it wants to make a move, it's going to keep on doing so with the 10. And otherwise, we're just going to close, because we're not investors, we're traders. We don't just hold randomly. We hold to make the money out of the move that we know should happen. And then once we're in it, we get the fuck out. That's it. And that's how a 1 minute based trader using EVC should be approaching an overall market condition when it's lining up for actual bullishness. Okay? And this is the paid version, but bullishness, this is the free version. And you can simply go and find And this is all on the mentfx.com website, so just feel free to click on these things here. These are premium, but that's okay. So now you wait, because now if price, okay, well, in this case, it just collapses back down. That's okay, that can happen. So I didn't get a chance to take another partial off. You know, the 3 candle rule was met actually quite beautifully. So all it becomes is a plus 1.96, and that's the end of that trade. There's nothing to get upset over here and get crazy about, because the market is still doing what it should be doing, right? It's still rising along the SMAs, and now if price can get tight again, it's going to create another opportunity for an entry. Because if you're a 1 minute based trader, then that's what you're focused on. Now in this case, what we're looking at is price just fails down and becomes unclear. So this is where you step back up to your contextual time frame and you wait for a new potential stage 2 to start, which means simply that, again, if you watch kind of a line here, imagine a line. If price can start moving beyond or around this line, you're coming out of a new stage 1. And at that point, just like that, we can now get involved and start looking at the validation time frame, because now, again, it should start to do the same things. So very simply now, what price should do is a version of what we saw here or here, but over here, right? A big move is going to come in because money is now entering. It should go sideways and then create a move higher. And that's where we're going to look to enter on the 1 minute over and over and over again. You can do this to the hourlies, the dailies, anything, just so you guys understand. And you can do this on any asset too. My entire entry is this exact thing happening just on a 65-minute chart, okay? You can see it right here. Same thing, higher time frame was doing a version of that move that you just saw. Then lower time frame started building structure, and then you started building those demand zones, and I entered through the demand zones. Similarly, on this entry that I took, exact same thing. There's no difference here, right? You had higher time frames building some kind of bigger range. You can kind of see it as I look at it here, but if I go to a higher time frame, which would be a daily for me, that would be my validation, it would be doing the same version of what we just saw. And the 60-minute is now building that structure that gives you that entry, right? Absolutely beautiful. This is how entries form, and I entered through that entry, and then I took this move higher, and it delivered quite beautifully, is all we gotta say, okay? And I do this for all my trades, and I just do it on a 65-minute instead of a 1 minute. But I'm showing you right now that if you're a lower time frame trader, if you have the time to sit in front of the computers, or if you have a much smaller capital and you wanna sit in front of the computer a lot and you're trying to get funded and you're trying to do it semi-quickly, this is one way to do it. This is what I want you to follow, okay? And you can see all we're waiting for is for momentum to come in again and do the same thing. But notice as we do this, that most trading, if you take a look, is actually going to be sitting on the sidelines until these moments happen, until these moments happen, until these moments happen, until those moments happen. A lot of people don't understand that, and what happens is they start to follow all of this action to try and get involved in trades. And as a result, as I love to say, if you're trading everything in the market, you are having random results. So a lot of you that are continuously losing and don't know what's going on, or constantly getting confused, or confused why you can't always get the trade right, or like what's going on, this is what's happening. You're forcing trades, you're taking trades when there's no trades to be taken. So stop doing that, it's useless. Instead, focus on the times where the market sets up true momentum to follow the market. So for instance, if the market makes a momentous move, which is doing now, and then move sideways as it should along one of the SMAs, which means that the big operatives, the composite operator or the institutions are coming in to support that move higher, that's where you want to be present, okay, on any time frame. So we'll watch the 6 minute and notice how at the time, I'm not stepping down to a 1 minute because there's no point. There's no entry to be had until it starts to build that sideways environment. So we wait, okay, and we wait. And hopefully it starts building something sideways just like this, okay? So what you're seeing now is price begins to build. I actually missed it, but that's okay. Price builds this sideways environment, and this was a perfect entry inside of there on a 1 minute. Now I missed it, so I'll wait till the next one if another one happens, and that's okay. That's gonna happen. So yeah, we just missed that trade. And now another one is building. Price begins to surf higher along the 10 and the 20 and starts to build this beautiful, beautiful range across the top. What that means is that the 1 minute's likely starting to set up a structural move to a move higher. So if we take a look at it, what you're gonna see now, right, this is the perfect entry if you were trading that area back there, but that's okay, is structurally, again, you start to put in legs, and right now, as this is happening, okay, you are actually setting up MB, MB. This is creating an opportunity for an entry through the high, simply. Once again, the exact same way. So what we're gonna do is we're gonna look to take it and see if we can get ourselves involved in this, if it wants to tap us in. So price taps us in, and again, we wait for strength to manage our positions. That's it. Strength starts to come in. At this point, we can easily see one more pullback and then continuation. So in the scenario that price breaks through this high, I will move to break even. Cool. So that gives us an opportunity to move right to break even at that moment. Now we can go back to the 6 minute and again use the same rule. Oftentimes in 1 to 3 candles, true strength and big strength is going to come in. And if it does, we can take a partial off and leave the rest to run. So this is 1 candle. That's 2. It's still not big enough, right? That's 3. Sorry, I have a fly on my keyboard here. Now I'm going to look if that's at least over 2RR. It is. So I will take my first partial here. I don't care if it keeps going right now. What I care about is taking money off the table when I'm truly correct and when the move starts, and then allowing the rest of it to run as it needs to. This is what's going to keep your losses intact. So when you take losses, it's fine because you know that for your winners, you'll also be partialing into them. And you're going to be making more than the actual losses. So the first partial gets taken right here. At around that 2 point whatever it was level. That's the 50% partial. And the rest once again gets trailed with the rising 10 and 20. So again, we wait. And again, notice if I waited another candle, I could have taken more partial. That's okay. That's part of the game. And I just wait. There's nothing else I can do. I wait till the 10 gets closed below or till price comes just under, right? So what I can do now is I can follow the 1 minute structure to also determine where a good point of getting out is. So if you notice the structure here, this is what it's doing, right? In general. So this low here, if we pinpoint the low, becomes a potential area to watch for a stop. Okay, so I'm gonna move my stop here for a second. And the reason we do this, I'm gonna explain this to you in a second, is because sometimes, let's go back to the 6 minute. Sometimes what you can get is a big candle like we saw earlier, but I wasn't able to manage into it because it just happened very quickly, that will just do this. And in that scenario, we don't have the time to wait for a 10 closure. Now, when we move the stop loss here, if we moved it here, what we notice is that the actual 10 is right there, which means that it's actually likely that price can pull back to that 10 and then get bought back up. So that means I want to move my stop and give it more space, but I'll keep in mind that this low was where a structural point was. So if the 10 and the 20 begin to move higher, that's where I can move my stop. So this is how you keep yourself in a potential move, given that it's delivering, right? And notice that I'm not worried about the RRs or how much it's up or anything like that, because that's not what makes you profitable. Just because it's up a lot of money right now doesn't mean you should close and will not make you profitable to close. Learn to follow very good rules in your trading and you're gonna make money, okay? So we wait. Okay, price starts to move higher with the, this is like absolutely perfect, so we wait. Comes under, right? Gets ready to close but doesn't close, so we just wait. It's getting bought back up. This is exactly what you want to see. Continues getting bought back up, and actually the most recent candle closes right here. So what you can do here is you can simply move your stop to right under this low because it's now acting as its own structure. And the reality is if price moves down below it, I expect it to fail down. And then at that point, I can take a step back and watch for my next entry. Because if you're a 1 minute trader, you're likely in front of the computer all day waiting for your opportunities, okay? Price keeps moving higher. It looks like it just keeps going. There's nothing to do. Comes down and very clearly closes below, as you can see. So that's exactly where I closed the trade, the full trade, and that's okay, at 4.14, which puts us as plus 2.07. Okay. And now, as a lot of you should know, we should be waiting for our next trade. Now notice that when you're actually understanding how to trade, you're not sitting there just catching a 1 to 50 randomly. This is a terrible way to think. Instead, you're paying yourselves on the winners, and you're allowing them to become big winners. That's what you're doing. The reality is in the market, big winners don't just come and come and come and come. That's not actually how the market works. Instead, the market mostly functions as a back and forth and a back and forth and not much happening. And then once in a while, the true move and the true big moves are gonna come. Sometimes you're gonna be in a trade like this and it's just gonna blow up to like, a much bigger high. And all of a sudden you'll get out right here for a 17RR gainer, which is exactly what happened to me, just so you understand, on GBTC. So that's actually on Bitcoin. Actually, oh no. I'll actually show you guys right now. That's exactly what happened to me on this market right here. This is basically Bitcoin, okay? I entered the trade, I took a partial out of it on around the 3rd, 4th day, and then all of a sudden, it blew up insanely fast, and I exited around here. Or down here actually, because I had a structural rule, and that was actually for around a 23RR gainer. This was my best trade of the year so far. Okay, since February, this was my best trade. And it was crazy. It was a phenomenal trade. But again, it happened because we are following the principles of how trends actually deliver. Now, without ruining where we are here, I don't want to ruin where we are. I want to just figure out where we are so we don't, again, Monday, right? So we're looking for Monday. So this is around where we started, right? Right around here. Okay, cool. I'll go back to the 6 minute. Beautiful. And this is the trade we just took and we got stopped out, right? Yeah, beautiful. And that's where we got stopped out. And this is just one of those examples where the move didn't manifest. It didn't create the big move. A lot of traders can't do this. They can't allow themselves to just properly partial into moves to allow the gainers that were 7RR up to become 4RR to take their second partial and close the trade and move on to the next trade idea. As a trader, you're not here to just buy and hodl, to buy crypto and just hope, to buy the coin and hope even more, to buy Dogecoin and hope even more, because that's not what makes you money as a trader. What makes you money as a trader is simplified rules that over time guarantee that you're going to increase your bottom line, and over time you catch big winners that do end up increasing your bottom line big time. That's it. So again, you would return to the same position. At the moment, the context time frame clearly, because of where we were, if you remember, this is the context line for me here. I used a gray line to denote it, just to make it easier for myself. We are clearly in a stage 2 because we're delivering out of it. And on the 6 minute, which is our validation now, right? Using the same rules, and you can use this for a 10-minute chart, a 60-minute chart, a 1-hour chart, a weekly chart, just to show you guys when I teach. I do examples using 15-minute charts, 1-week charts, 35-minute charts, 4-hour chart, everything, because it's all the same thing. It does not matter, okay? So what you're seeing is me doing that, in this case, on a 1 minute. Now, I don't trade a 1 minute, but this is exactly how you follow it. And again, just to show this, right, you had, I'm helping some members too, but you have the same thing happening on behalf of a lot of our members. People in gold, people in whatever this is, people in gold on a demo, but learning, perfectly fine. People in gold, order rejected, unlucky for him. Some people in some other stuff. In gold, but he's partialed, phenomenal. Like, this is a phenomenal trade. And you can see the same remnants, right? Structurally, we're moving long. We come down, we build that MB, we build that demand, and he buy stops through it. And then this is the easy delivery that he's now managing. Phenomenal. Same thing here for this guy on NAS actually, but they can be related sometimes. Took a -1 on gold right here and then entered through that high. Took that long, right? Over and over. I mean, same thing, right? Beautiful. Took a nice break even / small winner here, and then got into this one with beautiful partials all the way up. You know, over and over again. 8R on gold on a lower time frame. It's amazing in this mint. Blah blah blah. So that's Dow Jones, and what is this? Gold again, same thing. Entry through the highs. Again, understanding how the actual market functions. Another smaller based entry, but perfectly fine. Now he's trailed on this and watching it to go higher if he can. Perfectly fine, exactly what you want to see. Actually broke down his whole EVC, and you can see multi-time frame, EVC, same exact thing, no matter what time frames you're on. Absolutely beautiful. But this is all done because they're following the rules of the markets. So what you would do now, again, as you taken out, is you let the market deliver without you or form a new setup. That's it. Okay, well, this is even better because now you're seeing how just holding and hoping is one of the dumbest ways to trade, right? So now, once again, you're gonna wait for price to begin to do exactly what we wanna see, which is start building clear setups where it makes sense for price to reach out of them, okay? So we're gonna wait a little bit here. Here we are. And again, you're gonna get better and better at this as you do it. Now, for me, as I'm looking at this, I would wait for a little bit more sideways before I step down to a lower time frame because I just don't see the entry yet. Now, it's starting to surf higher just under the 50 and putting in this little range here, right? So it's not a tight range, but also it's moving sideways very beautifully right along the rising 50. This is good for me. This is an area where I would consider. Now, let me pause for a second and I'll be right back because I hear my baby screaming. Okay, the child has been subsided. Everything's okay. Now, as you can see here, right, again, as we're doing this, what you should be noticing is that there is no perfection, black and white rule that you should follow every time to make money. And the reality is, if anyone tells you that or someone's trying to sell you that, you're already being lied to. The reality of trading is that if everything was black or white, everybody would make money. So make sure that as you're watching this, you're learning to think about the fundamentals of how markets move rather than looking for a specific perfect pattern. Because there's not a perfect pattern, but there's perfect markets and perfect deliveries. And once you learn that, you start focusing on doing the stuff that actually makes you money. Now, what you see here is, again, price surfs just below the rising 50 and starts going sideways just around the sideways / moving up 10 and 20. So again, if we can reach above this, and the 1 minute is clear, we should start to see the same kind of entries potentially inside of there. So let's see what happens. So structurally, we start to put in this leg, come down, we come up beautifully and actually create this high. So again, if you do this right, a lot of the time, the validation and entry are working synonymously together. So by the time you move lower, it's gonna show you the entry that's going to become a valid entry if it gets you in, right? So then we wait, it's still building that high, and then it taps you in. Now again, what I would wait for is simply strength to move this to break even or take a simple loss. There's nothing else to do. Okay, so price begins to okay, phenomenal. Price puts in huge strength, so I move my stop loss to break even, and I allow this thing to lose if it needs to. I don't really care, because again, all I'm doing is I'm managing risk, protecting risk, and then doing it over and over again until I catch big moves. Now the 6 minute starts another move, and again, this is the first candle. So on average, 1 to 3 candles based on the strength that comes in, and we can partial into it. That's 2, nothing crazy. That's That's 3, and that's crazy push, right? This is a crazy strength. So all I'm gonna do is I'm gonna close 50% again, right here at the close of that candle for about 3.29, which is 1.645. So we take our first partial, 1.64, again, paying ourselves as we start to do the things that we should be doing correctly without forcing anything, without trying to pick lows and highs, just simply partialing 50% and letting the rest run using the rules that we've already set out. If we're right, price is gonna deliver. If we're not, it's just gonna come back, and that's okay. So we wait, and again, there's nothing to do right now, right? It comes down to the 10, and then it starts going extremely, extremely higher. So now you have one of those examples where this is called a runaway market. This is a market that has created a stage 2, but not only created a stage 2, but started to make it very impulsively and very quickly. Which means that again, our next partial would be around this black line, but that's okay. You need to accept that you are going to give up gains. So all I can do now, because I've taken my partial, is wait for my rule to be met, which is that price closes just below this black line. And that's what we'll wait for. That's it. I can't do anything more. I must wait. And that means I will give up price. But if I get the trend, which it seems like we're getting right now, we're gonna get out at a better price later, potentially. Comes down to the 10, and well, it closes just above the 10. So this is where I would move my stop, my entire stop. This would be this stop right here to this low, because at that point, if we dip below it, the likelihood is that we're gonna be breaking down. So we'll see what happens. And this candle actually breaks and closes below that. So once again, I'll close the entire position at the rule being met, because again, all I'm doing is I'm staying in trends. And something cool right now is that we're setting up a new opportunity. So if there's a new opportunity, we're gonna get back in, since we're traders, not investors. We don't just hold because it's fun to hold. So about 9.35, there we go, 9.35 over 2, so 4.67. And again, what you see as this is happening, as we're on the 6 minute now, is check this out, right? We're in an earlier push because this is a little basing period that happened and started moving higher, and this is clear momentum. And now we're surfing this thing higher and putting in this tight lower range across the top, which means once again that a lower time frame, aka our entry time frame, should begin to put in those clear moves that we saw before. I hope you're seeing this as a repetition of the same thing. So structurally, again, price is definitely making that structural move, breaking down in the anticipation rule. So this is where structure breaks down structure. And again, like you guys know, if you're in the mentorship, you already know about this, but this is just a simple rule that you exist in multiple structures. And this is the rule of the anticipation, right? Where price does exactly that. So again, you can study these images, you can save them if you're watching this YouTube video publicly, but that's what's happening. And again, as we're looking at this, right, and it's starting to get tight on that 6 minute, what you're seeing here is that price dips back into those MAs, which is what you want to see. I'm going to make these EMAs again because just more used to seeing that for the entry. There we go. It's just, yeah, beautiful. So it dips right back into them, which is what I want to see. And now, once again, through all of this, it starts to form the MBs, which basically become the buy stops through this potential high. Now, because this is much lower than the general area that I was looking at on higher, I would give it a second and I would wait for it to hopefully move higher and then pause. If it does that, that should formulate a perfect entry. So we'll see if we can get that. So it continues to get tighter. Now, hopefully it pauses and puts in one more count. Beautiful. And you can see it literally, if you let the market do its thing, it'll build up these trades, right? And again, I buy stop through the overall high of this buildup because we already have momentum present, protect around the MAs, and look if we can get entered. Now this, you want to be very honest about entries with yourself. And the reality is I would have entered this, right? So if this loses now, that's going to be an instant loss because this would be an entry no matter what. Okay, so we'll see what happens. Looks like it's coming back down for us and takes us out beautifully. So we record that loss. because that's all it is. You take losses for the things that you do. There's no ifs, ands, or buts about it, right? And now as that happens, you can see the trade actually continues to build this same thing, right? It still is very clear. It's still surfing higher. So the reality is it's probably going to set up another move, which is great because that's what we saw happen earlier. So we'll continue watching it on a 1 minute for an actual setup. Now, structurally, we're still there. That's very beautiful to see. Breaks down, but that's fine. We're just waiting for our rules to be met, right? Yep, breaks down, nothing really crazy. Right, you can see that on a higher time frame, it's probably still surfing higher along the 10 or 20. So everything's still meeting our criteria, but it's not very clear where that buy stop might be. There's definitely this overall forming demand zone here, and there could be another thing that forms here. And at that point, we might consider a long. But right now, there's not much for me to do, right? So I wait, and then like it's almost perfect, right? That this is forming right here because that's putting in exactly the kind of demand I'd want to see to be buy stopped, to get a trade on, just like this. And that's another entry that I'd be happy to take, okay? So we get tapped in, we now look for strength to move to break even. I don't know if it's gonna happen, but we don't get it, and you take a second loss. Now, oftentimes when I take 2 losses in a row from an area, I tend to walk away for a bit until it starts to clear up, right? So in this case, you can see, actually we might've gotten it just wrong, but that's okay, right? I'm not gonna go in and pretend like I'm gonna retake this because I've taken 2 losses, so I'd probably ignore this trade, right? So I just got it wrong by a bit. If I had actually waited and given myself, so even I will screw up as a trader, but if I had given myself the proper patience to wait for this to line up and create this MB, this was a phenomenal long. Now I missed that, and that's okay. You as a trader are gonna make mistakes. The only question is basically how are you gonna deal with your mistakes? Are you gonna force things after? Are you gonna start crying? Are you gonna start bitching? Or are you gonna move on and look for the next opportunity? In this case, we missed it, that's okay, and we get to move on to our next opportunity if one forms. Otherwise, there's nothing to do. Oh, and in this case, you see, it would have been a break even anyway, which is great. So as we return here, I'm going to put on the SMAs again because they help me formulate where I am on the validation time frame. You can see we're kind of starting to get choppy. It becomes a little harder to trade something like this, and you can see it just breaks down. So right now, there's not much to do, right? This is one of those criteria. This is one of those market conditions where anyone trading it is likely losing money because they don't know what they're doing. And now all the momentum has subsided. So now simply, oh, and this is live price. So that's right, and now you have endless amounts of people that are probably losing money in these moves here because they're trying to predict highs and lows over and over again from random areas. But this is the reality of how you want to approach trading. And if you're a lower time frame trader, the reality, as I showed you right here, is for Monday, you would have to sit in front of your computer for 12 hours. Now, this is one of the biggest reasons that I personally move myself to a higher time frame, where I do less work because I have to spend less time on the charts a day, but I can look at many, many markets. So what I can do now for myself is using the tools available to myself and the ones that we're actually improving. So this is going to be improved even more. I can look at stuff that's green and very powerful or very green across the board. And I can look at all of them independently and decide which ones are in a clear enough market for me to start watching if there's a clear enough entry. And then I can enter them for about 1 to 2 hours of the day and then manage it for the rest of the week or a month because I'll hold the trade if I can, right? Because if this is a trade that I take on a 60-minute, this will probably last around a month or 2. The trade you saw me take on Bitcoin, this one right here, just to explain this to all of you, right? This trade lasted around 2 months, 1.5 months. So about 1.5 months, I held this trade and then I got to partial on it normally. But if you're someone that trades a lower time frame, what you have to get used to is the fact that, hey, you're gonna be doing a lot more work in front of the computer on any given day. You're gonna be sitting in front of the computer a lot, but you also have the opportunity and the ability to look for and catch the same kind of trades, right? And there were more behind here. You can go and study them. There's more inside of here. You can study them. But I wanted to just to play by play the Monday today and to show you some of the entries because people trade different time frames all over, but some of the entries that my team had been watching for because they're along these exact same lines. And just to do an add up at the end here today for all of you, right? We'll do the add up. So you have a 1.96 minus 1 plus 1.23 plus 2.07 plus 1.64 plus 4.67 minus 1. So on the day alone, using this EVC system of understanding trend and of entering something that we've been bullish on for a very long time with the team. Okay, well, it's gone again. Let's go back to the screen here. With something that we've been very bullish with the entire team, and you can notice how easy this is. We don't have to click sign in or anything, right? Okay, you have something that's bullish. We've been following it for a long time with the team. We've actually been following it, just so you guys understand, since these points here, like I said. And now, if you're following an EVC of a lower time frame, well, you're going to be following the contexts that are clean off these lower time frames. And the reality is, as we look at this again, right, the context is starting to fall out. But again, if price can start to make its way through the range that's being built up by the stage one on the context and start moving higher, the validation and the entry time frame will come back into play, and those will all be opportunities again on a lower time frame. The reality of lower time frame is you had opportunities in this market endless amounts of times, all throughout here, 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 and here, and here, and here, and now today's test, today's video, just for all of you to hopefully give you some value so you can go and use this to actually go get funded, to start making your first bit of money, to start to come and use the software with the team. This gives you an eye-opener to how you want to approach the markets from any time frame that you personally choose to trade, and specifically using the EVC system in regards to the time frame approach that I teach here. Yeah, solid. And how much AR did we make again? 8.57. That's not bad. That means if you're risking 1% a trade, you made 8% on this day. If you're risking 0.5%, you made 4.25% on this day. And that on a, or even if you're risking 0.25%, right, you made 8.57 over 4, you made 2.14% on the day. And again, if this is a ment funding, here's your shilling. here's the sales pitch. If this is a normal ment funding $1 million account at 0.25% risk, right, and you made the 2.14, right, RR on this day, this is $5K, even with extremely low risk. And I want you to start to think about your scaling rather than trying to flip like $10 into 10,000, because that's not how trading works. Instead, develop a proper system, follow that system, make money, join the team, become a professional, and get better and better. Thank you, guys.